Hey friends, so when I first heard about family trusts, I used to think of those billionaire families, but I actually got a family trust set up a couple of years ago, and I don't have billions of dollars. I don't have billions of dollars yet. So why have my partner and I set up a family trust? Let me explain. But before we dive further into this video, it is important to remember that I'm not a financial advisor and I'm not a tax accountant. So if you're interested in learning more about trust structures and setting up a company and a trust, I do recommend that you chat to a lawyer and an accountant to see if it's right for you. Okay, so let's start from the top. What even is a trust? Trust is when you smash the like button on this video because you trust that Queenie will deliver the goods. And by goods, I mean more info about what a trust actually is. Thank you for liking this video. Let's continue. According to the ATO, a trust is an obligation imposed on a person or other entity to hold property for the benefits of beneficiaries. While in legal terms, a trust is a relationship, not a legal entity. Trusts are treated as taxpayer entities for the purposes of tax administration. The trustee is responsible for managing the trust tax affairs, including registering the trust in the tax system, lodging tax trust returns, and paying some tax liabilities. Beneficiaries, except some minors and non-residents, include the share of the trust net income as income in their own tax returns. There are special rules for some types of trusts, including family trusts, deceased estates, and super funds. Okay, let's be real, that does sound quite confusing. But the way that I like to see it is there are essentially 3 different types of entities that submit tax returns. There are potentially more entities, but let's just keep it at 3 for simplicity's sake. You can submit a tax return as an individual, you can submit a tax return as a company, and you can also submit a tax return as a trust. And each of these 3 different entities have different tax obligations depending on their entity. And all 3 of these have different advantages and disadvantages. So what are the pros and cons of having a family trust? And look, a family trust works for us, but it may not work for you. Think of it like toppings on a pizza. Pineapple on your pizza might work for you, but pineapple on pizza doesn't work for everyone. Maybe you prefer 4 cheeses on your pizza. So that's why it's important to chat to an accountant and a lawyer about your situation to see if it works for you. So pros and cons of a family trust. The pros are you get asset protection. We actually invest in our stocks through our family trust, which means that since the assets aren't technically owned by us, they are more protected. The second pro is business protection. My partner and I both have businesses. That's right, Elon Musk, we're coming after you. So we can use our trust as a vehicle to also protect our businesses, since our businesses technically aren't owned by us. And the third pro is distribution. If a trust makes a profit in a financial year, it actually gets taxed at the highest possible marginal tax rate. So that's why people may distribute the profits of a trust to beneficiaries at the end of the financial year. And the great thing about trusts is you can actually distribute profits to family members who have a lower income tax bracket, which means that you can save on tax. For example, let's just say person A makes $100,000 per year and person B makes $50,000 per year. And let's just say the profits of the trust is $30,000 per year. Instead of distributing the $30,000 to the person earning $100,000 per year, you can distribute those $30,000 profits to the person who is earning $50,000 per year. And therefore person B will need to pay more income tax because their income has increased. However, they won't be taxed as much as the person who is earning $100,000 per year, because the person who is earning $100,000 per year has a higher marginal tax rate. Does that make sense? But like anything in life, there are pros and there are cons. So let's go through the cons. The first con about setting up a family trust is that tax returns can be quite complicated. When we do our tax returns, we have to pay our accountants to do quite a few different tax returns. We have to do our business tax returns or company tax returns. We also have to do our trust tax returns, and we also have to do our tax returns as individuals. Trusts and companies can be really time consuming and costly to set up. It costs us a few $1,000s to set up the companies and also the trust. And it also does cost ongoing maintenance fees because of course we do need to pay our accountants to do the tax returns for all of these different structures. The third con is we lose ownerships of some of the assets in our personal name. The fourth con is a trust can only exist for 80 years, but a company can technically live forever. And the fifth con is that we found it quite difficult to invest in shares as a trust. opposed to an individual, because some brokerage sites don't allow you to invest as a trust. So that is an overview of what a family trust is and how we're actually using a family trust to invest and the reasons why we've decided to do this. I hope you enjoyed this video and found it useful, and thank you so much for watching this video all the way to the end. You guys are my real homies, so drop me a comment below with the word rocket in it, just so I know who my real homies are. By the way, 86400 is one of the banks that I use. They have a $20 sign up bonus this month instead of $10, and their savings accounts have an interest rate of 1.3%. There are no minimum card transactions that you need to make each month in order to receive this bonus interest rate. However, you do need to deposit at least $1,000 each month. And if you would like to check out 86400 for yourself, I've got an affiliate link down in my description below. Please use the code Queenie10 so we can both get some free money. Thank you so much for watching this video. If you did like this video, make sure you give this video a like and subscribe to this channel. I'll see you in the next video. Bye! And if you'd like to see some more videos, I've got some links to some videos here, so make sure you click the links and click through to another video.